All right, guys, welcome back. In this quick video, I'm going to talk a little bit about two of the main investment aspects of real estate and just some things to think about as we get going into talking more details. Those are cash flow and appreciation. Okay. Now, there are a lot of different types of investments. Most of them offer some of both of these. Okay. So cash flow would be an investment you make that actually sends you money on a consistent basis. Okay. So if you invest in bonds, like we've talked about, they're sending you interest payments. If you buy dividend stocks, they are paying out dividends. If you invest in real estate, they pay out rental income comes to you. Okay. A business is the same way. Okay. So cash flow is really, really important. The other one, again, of course, is appreciation, which is the overall growth of the asset, right? The value of that asset increasing over time. That's what everybody hopes for in their investment. Now, real estate, with the caveat that there's a lot of different types of real estate, there's a lot of variation, obviously. But generally speaking, real estate appreciates not at a really quick rate. There have been times where it'll grow quicker or lose value quicker. But over the long term, generally speaking, the value of real estate increases and kind of keeps up with inflation or a little bit more, right? So maybe you have 3 to 4% growth year over year in the value of the property. So if you sold it, you can bank on the appreciation coming in and maybe getting a little bit more out of it than what you paid for, okay? So that's the second option, right? With stocks, that's your main purpose, usually, is appreciation, right? You don't maybe need cash flow, so you're not going to invest in a dividend stock. You want to invest in a growth stock. So no dividends, but you're getting appreciation, right? If you want income, then you're probably focusing on dividend paying stocks or bonds that pay interest so that you can get cash flow and you're not worried about the value increasing, okay? Real estate has the same kind of consideration. And so what's really important here is, of course, if you own an asset that is appreciating in value over time, then that's great. But above average rates of appreciation can be very, very difficult to achieve over the long term. Okay, again, there's a lot of caveats here. So geography matters, type of property matters. There's a lot of variables that go into this, but I'm just talking generally. And so if you are purchasing a real estate property and you are anticipating to make the bulk of your return through appreciation versus cash flow, then you might need to rethink the strategy, okay? First priority here with real estate is cash flow. That's the primary consideration. I won't say across the board, but generally speaking, cash flow. So if you're going out and you're looking at purchasing a rental home or something like that, you have to make sure that the cash flow works. That side of the equation works, meaning you're going to have enough to cover your expenses, your fixed costs, right? Your mortgage, property tax, insurance, maintenance, things like that, and gives you enough to save up for variable expenses like, hey, I got a new roof, a new water heater, new furnace, things that happen every once in a while, big repair, whatever it is. So you want the cash flow to at least cover those. So that's as a minimum, hopefully more than that, okay? So we'll talk more in detail about this, but that is your primary consideration. If there's a property and it does not work from cash flow, right? The numbers don't add up on the cash flow side. It doesn't matter about the appreciation generally. It's probably not a good deal, okay? So you have to make sure it makes sense because you can't be losing money month after month because your cash flow is not as good, banking on the home appreciating to the point where you can sell it, okay? Generally, that is not a good strategy to go with, okay? So cash flow first. If you also happen to be in an area where maybe there's above average appreciation due to shifting demographics or the state you're in or the city or the type of home or property it is, and there's extra appreciation in that property that you can, capture once you sell, that's great. Of course, we want appreciation. If it's a value add project where you're putting money in to revamp it, renovate it, and increase its value that way, then obviously that can work as well. Okay, but just thinking about normal natural market forces of a property appreciating in value little by little, it's hard to bank on high appreciation long-term for real estate. So focus on cash flow. Appreciation is going to happen. And the more appreciation there is, then it's just kind of like icing on the cake. But it has to work from a cash flow basis to begin with. So don't neglect cash flow in favor of appreciation. You got to make sure cash flow works, okay? Because you have real expenses. You have a real mortgage. These are fixed costs, right? If you have property management fee, and so forth. So it has to work on cash flow. Appreciation kind of takes second priority. Okay, cool. That's all I want to talk to on that, on that subject. It's just really something important to keep in mind as you begin looking at different real estate investments that are available and really seeing if, hey, could this work? Does it not work? Want to give you guys kind of a primer there. So we'll keep going. See you guys in the next video.
Subscribe and keep learning with us.